O meu lugar é caminho de algum reação. Lá tem samba até de manhã, uma giga em cada bar. O meu lugar é cercado de luto e suor, esperança num mundo melhor e cerveja pra comemorar. O meu lugar tem seus mitos e seres de luz, é bem perto de dois povos, cascadura vai viajar. O meu lugar é sorriso, é paz e prazer, o seu nome é doce dizer, Madureira. O meu lugar é caminho de alcançar, atenção da de manhã, uma giga em cada lugar. O meu lugar é cercado de luto e suor, esperança num mundo melhor e cerveja pra comemorar. O meu lugar tem seus mitos e seres de luz, é bem perto de Oswaldo Cruz, cascadura mais Pirajá. O meu lugar é sorriso, é paz e prazer, o seu nome é doce dizer. Como é que é, gente? Madureira. Mais uma vez. A saudade me faz relembrar os amores que eu tive por lá. É difícil esquecer no seu lugar, que é eterno no meu coração. É os poetas traz inspiração pra cantar e escrever. Ah, meu lugar, quem não viu te eu lá dançar, com ali o terreiro dizer, e ainda tem jogo a luz do ar. Mas meu lugar, tem mil coisas pra gente dizer, o difícil é saber terminar. Madureira. Diz aí. Mais uma vez lá.
Welcome to the Execution Lab webinar. I am Charles Clark, your real estate investment broker with Raise the Standard Real Estate. And I have to give a big shout out to Next Home My Way, the brokerage I am at. I am also the director of agent development there. I hang my license up there. And I am in their amazing media studio where I do pretty much all of my webinars, my lunch and learns, and a lot of my videos that I do. So huge shout out to Angel and the team, Jose and Carlos. Big shout out to Angel for putting the studio together. There's not too many brokerages around in Milwaukee or southeastern Wisconsin, where I do most of my business, where a social media studio is available to them. So again, big shout outs. Thank you for allowing me to put on my webinars in the studio. Thank you guys for coming, for showing up. I appreciate it. I try to put this weekly webinar on to help educate investors, new and old, transitioning from 0 to your first one, or transitioning from 25 and wanting to change your strategy, and then from being a real estate service person, someone that's in real estate that wants to learn how to start investing. They've been surrounding it and see the benefits of investing. So some people ask, why would you listen to Charles? Well, let me give you a little background. I've been in real estate since 2005. I did take a little hiatus, but that's when I originally got my license. Um, uh, Went back to school to get my bachelor's in finance from the UW Milwaukee. Go Panthers. While there, I also got my minor in economics, and then I got another minor in economic development. While studying there, I studied abroad in Paris, France, where I got a certificate in international business. And while you were hearing the Portuguese music, that's what you were hearing. I studied abroad in Rio de Janeiro, Brazil, where I got a certificate in Latin Caribbean studies, where I was in a really cool program where I was able to study international finance and community building with Portuguese. So, eu falo português pouco. Um, I tell people I can't speak it that well, but I can get us drinks. I can find us where to sleep. I can get us food, and I can get us in trouble. But so that's my background. I own real estate myself. Had a nice portfolio. I had to reconfigure things, and I'm reestablishing my real estate portfolio now. I work with um, in-state investors, and I also work with out-of-state investors. I would say out-of-state investors is probably my key demographic, just because of how my systems are set up. It's more pertain to deploying capital for investors and doing a lot of legwork for them, and so that they can just invest. Because at the end of the day, my motto is I don't help people buy properties. I help them build a real estate business. And um, it just so happens that property um, is a duplex, right? That business it so happens to be a property, right? So all right. Well, that's my background. That's why you should listen to me, because I'm not just a real estate broker. I have a finance background, so I understand the terminologies of finance and how money works, and how you can use money, debt, um, to build a real estate portfolio. So let's get into it. The investor execution system. That's I kind of built this program. It's a couple parts. I built a 90-day program that I have within the Aspire Mastermind group that I co-run with some amazing fellas. Um, so I wanted to create an ecosystem. So the investor execution system is summarize that ecosystem system, because I'm the licensed broker, right? What I've realized being an investor myself, that the broker was kind of in the middle of it all because of the transactions, right? And what I felt was, after the transaction was done, a lot of investors were left alone, and that's where I came up with this, this, if you want to say, motto of I don't help you buy a property, I help you buy a business. It just so happens to be a property, right? Because I just realized that after you bought that real estate property, that's where everything begins, right? It's if you have to remodel the property, getting contractors, getting plumbers out there, getting electricians out there. And then after you get that done, you need to find tenants. And then after you get the tenants in there and the property is functioning and running well, now you have this equity that you need to take advantage of, and you need to pull out and so that you can redeploy it, right? A lot of people just look at cash flow, and what I kind of preach is the BRRRR method, right? It's the buy, rehab, rent, refinance, and repeat. That strategy is how you build real estate business. The cash flow is just not good enough, and even with the cash flow, you need to recapitalize it, right? Getting $500 a month is cool, um, but what if I could, give away 300 of that, and someone gives me, $40,000, because I was going to get that 500 for the next 5 years, and now they want that steady income, right? And I rather have a lump sum of money and redeploy that. So that's kind of what I built it on, and that's really where my financing degree comes in, is that I am able to understand that financing aspect of it to help investors redeploy that. I think there's a misconception with landlords, and that they're all rich and they're corporations, but the majority of your investors that buy duplexes, 4 units and even up to 10 units, are your mom and pop investors. They're your next door neighbors. And what happens is that they treat real estate like a hobby until they realize that they need to treat it like a business. And what I try to do is, from day one, help you treat it like a business so that you don't miss out on certain opportunities because you didn't treat it like a business. So again, this is not about motivation. What I try to tell people is that because I am a real estate broker, I can actually hold your hand through this whole process. So I'm not just trying to motivate you to do this, even though there's some motivation in it, because if you desire a better life than what you're wanting, real estate is a way to do it. I tell people there's, I guess if you want to say, my 5 pillars of wealth, is that you have to invest in for you to always be wealthy. And that's you have to invest in bonds, you have to invest in stocks, you have to invest in real estate, you have to invest in local businesses or business in general, and then entrepreneurs or people. And if you reverse that, that's how all those things get built, right? You invest in a person like yourself, that person is going to turn that into a business, right? So as soon as you buy that duplex, you invested in yourself. Well, you got a business right away, right? And hopefully you take that duplex and buy a few more, and well, now you buy more real estate. Well, maybe you need to buy an office. Well, you or rent an office to, to keep your business separate from your personal life. And then if you grow really big, you eventually take it to the market, right? Like some real estate companies, right? And they are on the stock exchange. And then you get really big, you can offer bonds off of that, and or invest in bonds, right? The government offers bonds so you can stabilize your portfolio. So all this ties into building wealth, right? So we rely on math, structure, and execution discipline, right? So if you do all those things, you're going to be wealthy. There's no way around it. The market does not reward effort. So um, you can work hard, you can work 60 hours a week, and if you're not working in the right things, um, you can still live paycheck to paycheck, right? So this is more than just putting in effort. It's establishing a structure, right? What a lot of people do is that they get trapped, right? And this is not the rat race. I'm not going to speak on that because I think employees are important, right? Eventually, um, you need to hire employees, right? I hire employees, right? I hire contractors. They are, short-term employees for me, and I need those individuals, right? And some of those contractors have employees. So I'm not one of those gurus, or I don't even see myself as a guru, but I don't downplay employees. Employees are important individuals, and they're not dumb people, right? They're not people you should take advantage of. They're people that if you pay them well, they will be your employee and still work for you and allow you to live the life you want to live. I think sometimes we um, take advantage of individuals that help you get things done, right? I tell a story of how when I realized real estate was it for me. It was when I was going on a trip to Mexico, and I set my systems up, and I was in Mexico, and I had a really fun night. And one night I spent about $500, right? Well, that might not seem a lot, but $500 is a lot to some people. And but I woke up and I had an email, and one of my tenants paid. They paid their rent, and it was $750. So instead of me being down 500, I was up 250. And in that moment, I realized um, um, that real estate was it for me. But also part of that story was that some things needed to be worked on, right? And I had a handyman where I had my system set up where my tenant could reach out to my handyman to get that thing fixed, right? And I had to pay him, but if I didn't have that handyman, like that issue would have lingered and things would have broken down, and that problem would have got bigger than what it was. So um, so you got to have people you depend on, and some of those people are employees. So, but the system works because you have to have things in place, right? And it is moving from one phase to the next, right? And I think what happens with a lot of people is that they consume so much information and they consume theory, like BRRRR. People could keep researching the BRRRR method, but then never move forward. And so part of this program that I've created, this system, is to get you from each step and keep you moving and not allow you to sit in that step. And if you do want to sit in that step, and then um, I'm able to say, hey, maybe this is not for you. Maybe you just need to be an employee and invest in a 401k, and that's what you need to do because you're obviously not wanting to move forward. People that say, well, I got to pay off debt, credit cards. Well, who told you? Did a lender tell you that? So I force people to say, hey, you go to a lender, have a lender say, this is what you need to pay off. Because when I bought my first property, I had credit card debt and I had school debt. And I thought I needed to pay the school debt off, and I thought I needed to pay all this credit card debt off. And I found out I only needed to pay off a portion of my credit card debt. So the whole point of this is that execution gap is to get you across that bridge, and where you can start now, doing capital deployment and building wealth, right? So um, and at the end of the day, because this system in place, it's repeatable, right? And that's where people fail, is that they don't have a repeatable business that they can, a repeatable system that they have in place, so that when they get stuck, they can say, okay, what do I need to do? Where am I in this process so I can keep moving forward? Why am I stuck? And then when you get through to a certain point, you can start back over, right? And know, like, okay, this is what I do, and keep everything moving forward. Um, I don't help buyers. So one of the things that I tell people is that if you're trying to buy a home, I'm not your person, right? There's a certain conversation you need to have when you're trying to buy a home, that I am not the most empathetic for, right? If someone is saying, hey, I need to buy my home in this neighborhood because I want to raise my kids there, I'm not the best person to talk to. I don't know how to truly empathize with that. And a lot of investors become like that. Well, I don't want to invest in that neighborhood because da 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 da. Then you're not an investor, you're a buyer. Because if you're trying to have a certain return, you go where the return is there, right? And if you assume that you're going to get certain tenants in one area and you're not going to get those bad tenants in the other, again, you have an, I would say, an incompetence of human beings, right? Some of you can have people who try to rent something that it makes them live check to check, and they have one issue, and boom, they can't pay their rent for the next 2 months, 3 months, right? That's no different than someone in the lower end of that, and it has the same situation. So to sit here and just assume that you shouldn't buy in a certain area when you're an investor, you're chasing cash on cash return, you're chasing return on investment, you're chasing those quote unquote numbers. And that's how a business operates. They don't operate with feelings, they operate with numbers. And that's where some people might feel some type of way of, well, that's what's wrong with landlords and things like that. They just look at numbers. So the difference with me is that I teach people, hey, when we go through these analysis, each line item, that's a person, right? IRS, even though that's the government, there's an individual that collects that, right? That person calls you, right? The landscaping, that's a person, right? Even the rent, right? That's a person. So like we should humanize each line item because that is a human being, right? But at the same time, let's not put our personal feelings into when we're running these numbers, right? Because that's how you create a system. Because if the numbers doesn't make sense, you keep moving on. But then some people, well, I want to be in this area. I'm going to make these numbers work because I want to be in this area. Well, then that's where you fail, and you're just now a buyer, right? You're just like it says, you're chasing random deals. You're evaluating properties with emotion. I need to be in that area. That properties rarely come up in that area, so now I got to be on there, right? Um, you don't want to pay for true coaching, right? Like people are. I can get all my information on YouTube education. That they're correct. You can learn a lot, but YouTube can't call you up and say, hey, how many deals you've been running? Are you have you went and go and look at properties, right? And some people get stuck. They buy a couple properties, and then I had someone reach out to me. They wanted a consultation, and um, they wanted to scale. And I asked them a simple question of, well, have you bought something? And it was like, yeah, I actually did. I bought a single family. I mean, I bought a duplex and it's cash flowing. All right. Are you able to refinance and pull money out? Nope. Well, that was a bad deal because they couldn't do what they were trying. They couldn't implement their strategy, and their strategy was scaling. And so if they needed to scale, they couldn't let their money be trapped in a deal. Right. So these things help you build everything up so that you can execute the strategy that you're trying to accomplish, right? You're not doing what you said you wanted to do, and you can't build up your portfolio. And what I say, your initial goal should be $1 million portfolio. That's your true mark, is getting up to $1 million portfolio, and then after that is off to the races. So the architect execution machine. So there's 5 pillars that I try to focus people on, which leads into the 5 things where you're analyzing. My 5 steps when analyzing kind of coincides with my 5 pillars. Strategy. You need a strategy. What are you trying to accomplish? What are your goals? What do you want to do? Exactly what you're trying to chase, right? I always start out with a couple if they want to have someone stay at home, right? Or they want to be able to be more at home with their kid and not necessarily depend on um, one income. So it's like, okay, what are your bills then? Well, our bills is we live off 5,000 a month. Okay, perfect. That's our goal now. We need to reverse engineer now. How do we get to 5,000 a month? Then I'll say, hey, what is an acceptable number for you to get per door? 250. Cool. Now we need 20 doors. We got a strategy. We got a plan. And now we actually know how to analyze a deal, because if we didn't have that 250 number, if we didn't have that 5,000, we couldn't analyze a deal, because you can analyze any deal and come up with an outcome. But if you don't have your number, that deal doesn't make sense, which that's where if pillar 1 cracks, you can't execute. Right? You might be able to have the capital, but if you didn't have that number of 250 a door, me running the numbers on a duplex and it says it'll make 300. I don't. Well, is that a good deal or not? Well, I don't know. I only know now because I know my number needs to be 250 a door. So if I look at a duplex, it has to make at least 500. So now I can look at that 350 and say, okay, can I raise the rent and get that to 500? Oh, wow, the rents are actually way below than what it is. Hey, I need to fix this property up. I can actually make 700 out of this property, but where I'm running the numbers right now, it doesn't make sense. So having the strategy allows you to do everything else, right? Having that strategy is well, I want to scale. So I want to get to this thing. So now we got to run things based on, can we BRRRR it, right? Because then that's the exit strategy. So now all these things come into play when you start with the strategy, when you start with the end in mind, right? Now it's easy to execute because now I can get capital. Now, once I do a deal like capital infusion, right? Now it's just circling around and I can keep executing because I know what I need to look at. I know when I'm analyzing. Now I can go to family members and say, hey, family members, you got extra money? Give it to me. I got this system running. I know what I'm doing. And then your exit strategy, if you go into a deal and you don't know how you're getting out of it, you don't have a deal, right? You're trapped because you don't know when you should sell it. Like people ask, well, when should I sell a deal? When your exit strategy should tell you when you should sell a deal. So input in an engine, right? Strategy, analysis, and capital, right? These are your first pillars. This is what gets everything going. This is what gives you your compass, right? Your strategy is what gives you your aim, what you should be looking at, right? If you starting off and say, hey, you know, duplexes. Well, I don't need to look at a 10 unit, right? I'm focusing on this right now because I need to get this underway and get this for me. Like let me go after this 10 unit in 2 years, right? Because there will be another 10 unit, right? Don't assume like, oh, I got to go after this deal. No, you don't, right? You go after what you need to do so you can understand it. And so now you can start building your wealth. Deal analysis, it's just a filter, guys, right? It's paper. Because I can run an analysis on a deal and it says it works and I close, the next day the roof collapsed. Well, that deal analysis is out of the window because I didn't plan for the roof collapsing. I got insurance. I planned for the insurance. The insurance is there to now to help me out, but I didn't plan for me needing to put $20,000 into it on day 3, right? And then the capital plays a huge part because of how the deal is going to run, right? Are we doing hard money? Are we doing a DSCR loan? Are we doing private lending? Are we going to refinance and get the money back out? Am I pulling money from another deal to put it in here? Am I doing a 1031? All those things is what keeps this machine running, is the capital. And so having an understanding of how that works is what keeps this machine moving forward. So execution, right? This is where everything fails because people don't want to pull the trigger. Talk about a client myself, and if he's ever listening, he'll know who he's talking about. I had a client, right? We had a great deal, and he bagged out of it. And then and he bagged out of it a day before closing and lost his earnest money because he just didn't want to pull the trigger. And it really broke my heart because I really felt like it was a great deal. And then after that, he took some time off and then he came back and, we started going after again. We got under, I would say, another 3 contracts. And the last one, we were going back and forth with it. I think I think we got it from under contract at 170 and I think we closed at maybe 120. But he was nervous because there was things wrong with it. But that's the deals you got to go for, right? You're not a buyer, right, guys and gals? For real estate to work and for you to be an investor, you have to find the problem properties. That's the only way this works. So finding the properties where there's no issues is a fantasy. It's a fantasy world that some people have shared in some of their books and said, well, I've got this house for 50,000. I only had to put 10 in it and now it was worth 120. Those things happen, yes, but if that's what you're trying to frame your deals around, you're never going to get any deals done. It's going to be the deals where you have to put 60, 70, 80, $100,000 in a deal to make it work. And that was the situation with him. He needed to put around 80,000 into this deal, but he was using hard money. He was using someone else's money. And this is how this game works. It's OPM, guys. It's other people's money. This is how this game works. And you have to take risks. High risk, high reward. It is what it is. And if you don't want to do it, go do something else. Go get a 9-to-5, right? You don't have to risk. The risk is on the owner and you don't have to worry about it, right? So execution is key, right? If the numbers make sense, you have the capital, it fits your strategy, you have to pull the trigger. You have to, or it doesn't make sense. It doesn't make sense to have a system if everything lines up and it meets your criteria. You have the capital to do it. You ran the analysis. You have to pull the trigger because the exit strategy is your safety net. Same client. We did a deal, which I'm actually going to go over in this one. And I'll share with you, but at the end of the day, we had multiple strategies for this property. And that's the difference where I would say with some, what makes me different than other brokers and agents is that because I only work with investors, I know I'm not helping you buy a property, I'm helping you buy a business. And so there's got to be multiple ways we got to look at this. And you just can't look, well, I'm going to buy and hold this and that's it. Or, or I'm gonna fix and flip it, right? We gotta think of each strategy and rank them so that we know when, if different certain things happen, we can move when those situations arise. And like I said, I will go into a little bit more detail. I don't want to tell the story because we're gonna actually go through analysis. So how do I go through analysis? Big shout out, as I said, part of the part of the ecosystem that I plug you in when you working with me is the Aspire Mastermind Group. Through that, I created an Aspire calculator, which has the acronym using Aspire. This calculator is, a capital protection. It overrides deal enthusiasm, right? Again, this is part of, it's a system. You put it in the system, you put the numbers in, it filters things out so that you can focus. So the acronym is Aspire, A for address. That's the asset, right? You know the address, you know what it is, right? It's such and such, 123 on ABC. It's a duplex. It's in this area, blah, 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 right? Then you want to go through S, the seller situation. Is it owned by an LLC? Is it owned by a person? Is it owned by the bank? You want to kind of know those things because that helps you structure your offer. Then price, right? What is the price on the market? What are they wholesaling for? What is your price assumption, right? You should have both of those numbers. Hey, yeah, they're selling it for 150, but is it actually worth 120? Then you want to go improvement. Unless, like I said, you're buying an A plus property and you're just using it for just getting a return, program is not for you, right? You're buying things that you need to improve it, right? You need to do something to that property to make it worth more. So I is for improvements, investments. R is for revenue. So revenue could be rental income, or it could be your fix and flip, right? The return when you sell it, right? So the revenue from this deal, it can be rental income after you're done, or it can be from the fix and flip profits. And then your exit strategy. Again, the calculator goes through 5 exit strategy. It's buy and hold, the BRRRR, fix and flip, seller financing or creative seller deal, and then wholesaling. So those are your 5 exit strategies that the calculator kind of goes through it, but that's also what I use as my system to analyze deals. So again, kind of went through this already, right? This is sourcing and evaluation. This is how you initially get everything underway. Address, ad set, what is the fundamental viability, right? I know it's in this area. I know things going in this area, go for 250,000. Well, that kind of helps you. Hey, I think that's a really good neighborhood. I think it's an up and coming neighborhood. So let's look into that property a little bit more. Seller situation, again, why does this deal exist, right? What is the seller doing? What's happening? Has it been on the market for 50 days? Is the seller ready to, lower the price and do other things? Price and price assumption, right? What do they have it on? And what are you truly willing to pay for it? And sometimes you might not know that, right? The maximal MAO and the maximal acceptable offer that you're willing to give, you might not know until you have the rehab budget, right? And then this is the value creation and protection, right? What I tell people, your general contractor is the bee's knees. That person is what makes this whole thing works, right? Besides the contractor and the rental or the next buyer, those are the most important individuals. Now even the buyer, right? The most important person in this whole ordeal is your contractor. So that is one of the most important people you can go find beyond me and a lender and money, right? But is the contractor that's willing to do work for $20,000, but is adding $60,000 worth of value, right? That's the difference maker in this whole process. If you can get that person on your team and making sure that they can work and they get everything done for you, you got probably 60% of the work done, if not 70. Then it's revenue again. What will this machine produce, right? What will this property this system create? Is it we're going from 700 in rent to 1,000? Are we going from a wholesaling deal where we got $5,000 to now we're fixing and flipping and we can make 60,000 on it, right? Again, you don't really know the revenue besides the exit strategy, right? Because again, with the exit strategy, you can raise the rent, but if you BRRRR it, you might be getting initially that amount of money, but then once you pull off the money and you have a higher mortgage, that revenue might be going down a little bit. Narratives do not validate deals, numbers do, right? So I'm going to go through an actual deal that I recently did with a client of mine to show you that this system works. In this situation, we started going down one path, and because I gave him alternative solutions to the project, he was able to pivot and still get everything that he wanted to do and still make some money. So we did the BRRRR strategy. Asset was a distressed single family. It was on the market it actually fell through on a deal. The agent reached out to me because I was interested in it, and we saw it. A matter of fact, it was another client of mine who missed out on a huge opportunity. They saw this property because it came back on the market. We put it under contract. I believe we had it at we got it from 130 to then 127, and then we had the inspection, and we got it down to 127. I think we was 130 and we got it down to 127. They wanted it down to 122. They wanted 5,000 less, and they was like, this number had to work. And I was like, that's insane. $5,000 does not make a huge difference. And they were like, no, we need it. We need to get out of this deal. So I was like, hey, before we get out of this deal, I know some investors that I think will really consider this deal. Let me reach out to them before we do that. And lo and behold, my client in California, I shared this deal with him. Again, this was kind of outside of his wheelhouse, but because he wanted a certain return, because he was more looking for BRRRR and rentals, I sold this to him from a fix and flip opportunity. And the reason why he looked at it was because it met his numbers, and he somewhat couldn't pass it up because he didn't get fixated on it not being the BRRRR strategy, but from a fix and flip strategy. But then what I did to make him feel better was I gave him the BRRRR outcome. I said, hey, if the fix and flip doesn't work, and if we can get it to this point, here what it looks like if we BRRRR it, so that you can feel comfortable moving forward with this deal. And that's kind of what helped seal it. Improvements, budgeted for rehab budget for like 60,000. And then, like I said, the rehab. So we were going to fix and flip it. We was planning on trying to sell it for about, I think, put it on the market around 255, 260. And during that, we started running numbers again, and we started seeing the market shifting a little bit. And we had to add something to his budget, because what we started seeing was the things that were selling at the amount that we wanted had two baths. This one only had one bath. So we actually ended up putting a half bath in it to make it more compatible. Making it more feasible for the market to get that number closer to what we were looking for. After we got the rehab done and everything else, got a little uncomfortable. He felt a little bit uncomfortable about trying to put it on the market and then having it sit. So he was like, hey, what if we just rent it out? And then lo and behold, we said, we think, because I ran the numbers at around like 1,800. So 1,800 would have worked, but we were like, hey, maybe we should just put it up higher and just see what we can do. Got 2,200. Blew it out of the water, right? It was, and we probably could have got more because we got someone right away, but 2,200 is what we got it at. And so because he was able to get it at 2,200, he was able to take it to a DSCR loan, and they were able to refinance it. It appraised at 249. So I'm gonna show you this this huge demographic to kind of break it down, the capital stack. So we purchased it at 127, put about 60,000 into it. We're all in 187. The new appraised came out 249. So it came close to what we thought we could probably sell it for, but just kind of felt nervous. And I think he kind of fell back into, saying, hey, I feel better with it being a BRRRR than just being a fix and flip. So ended up what happened is that got it appraised at that. And so it was all in 187. So 75% of that is roughly around 165. So he pretty much got all his money back. And that's what I tell people in this market. If you run away from a deal because you put 60 in it and you said, well, I couldn't get 80,000 out, I think you're going to be sitting on a market for a very, very long time, because he was able to keep the asset and get all his investment out. If that's not a win-win-win, I don't know what is, right? He was able to get his investment back out. He was able to keep the investment, cash flow off of it, and get his money back. That's win-win to me. And so his exit strategy was stabilized because he was able to refinance it out. Like I said, it was about 186.7. He was in 187. That's pretty much all his money back out. Now he was able to. Now he took a couple months to get some more of that cash flow from his renters. Now he's getting a 25% cash on cash return from what he's had to leave, the little minimum that he had to leave in the in the deal. But now he has capital to move forward and look for another deal. So I praise this investor because he is one of the individuals that is proving that my program is working, and he didn't realize he was in my program. He was a guinea pig of mine. But he went from zero portfolio to a $500,000 portfolio in 1 year. So he is someone who's, this year is going after that $1 million portfolio. I told him we definitely can do it because he got 2 deals last year, and has a $500,000 portfolio now. He actually had 2 separate loans, and then he actually put it into a portfolio and got a portfolio loan out and was able to pull some more money out. So, and with a portfolio loan, if you didn't know, all you need is at least 2 properties to get a portfolio loan. And so now he's going after it. So I told him we got 2 deals last year. I think we can get 3 deals this year if we do it right. I think the market is set up for it, because the market has shifted. It is a buyer's market, and things are sitting a little bit longer. So I think sellers are willing to negotiate. And now, as a finance person, just because you know the math doesn't equal execution. People will analyze deals all day long, log into Zillow, see things, and then stop, right? People will get caught up with analyzing deals all day. And even though I just praised my client, sometimes that was his failure. He was analyzing and just got caught up with the numbers and didn't want to move. But at the end of the day, you got to pull the trigger. You're gonna mess up. You're gonna get it. You're gonna have a bad deal. You're gonna have a bad deal. As soon as you accept that you're gonna have a bad deal, you can move forward. One of your deals are gonna be bad, and if your first deal is bad, you can recover. You can recover from a bad deal, because if someone can recover from having 100 properties and losing it all and starting back over, you can recover from one. Would it might take a little bit longer? Absolutely, but you can recover. So get over fearing that you're not going to fail, because you're going to fail, but you can recover. This is where my motivation comes in. You're going to recover because you're going to keep moving forward, and you got to have the right team around you. So just because you understand the math doesn't mean it equals execution. You still got to pull the trigger, because once the math makes sense, you got to pull the trigger, because the math can make sense and people still don't pull the trigger. So pull the trigger once the math makes sense. Again, I know I was just speaking on motivational mindset. Get rich. This is not get rich quick. This is putting in the work. My client went from $500,000 because he put in the work. He put me to work. He put the contractor to work. He put the property manager to work. This ain't about blind optimism. This has worked. This has, as long as people have been providing housing and using equity and debt, this has worked forever, forever, and forever. So long as you put this to work and you execute, this will work. You got to analyze deals. You got to offer. And that's the other thing. Just because you analyze deals, you got to go to the property and then you got to offer. If you're not offering and you're just analyzing deals, you're just sitting on the sidelines. You're on the left side. You're a college professor. You're theory. You're just theory based. Everything is theory. Well, if this happened, this will happen. This will happen. So blah blah blah. Right? You're just a theory. You're not actually in the real world putting things to use. Right? This is where my system comes into play. It takes, yes, you need some motivation. You need a mindset. You need a motivation to analyze 5 deals a day. Right? You need some theory about it, right? The BRRRR method is a theory, right? You got to have some blind optimism, right? This is going to work. I know this is going to work, right? That's blind optimism. Is my client making a little bit more money than he did before? Yeah, like you can get rich kind of quick with this, but that's hype, right? It's you got to still put in the work, because if you just do one deal and get one big check, that doesn't make you rich. That just means you got a big payout. Right? This is being disciplined. This is taking risks, right? A lot of my clients, I put home warranties into our deals because something might happen that they might not be able to have all the money to take care of. So now you have that home warranty. We try to write in a deal so that the seller pays for it, right? Or I try to write in it so if the seller's not going to pay for it, hey, you can get the lending because you have that money right now that you can lend on it and then pay for it. There's ways you can protect yourself and lower the risk, but you can't eliminate it, right? People try to eliminate risk. You can't eliminate risk. You can just lower it. And working with the right team helps lower it more and more. Again, while you're here, right? And what I'm talking about is the execution lab. So part of the execution lab is the 90-day program that I have put into this whole thing. So the execution lab, the goal of the execution lab is to get you into $1 million portfolio. My goal is to do it in 2 years. So the outcome that you're looking for is $1 million portfolio if you get into this execution lab. Because if you get into this, we're going to get that first property, or we're going to get you into that next property and then to the next one and the next one. The goal is to get you into 3 different transactions a year. If you do this, if you get into this program, you're going to do at least 3 transactions, and we're going to get you in $1 million portfolio within 2 to 3 years. That's it, because I know this works. That's the solution from this. This is not an online course. This is an operating system for your real estate business. Everything that we put in this 90-day program, I know the 90 day is that if you put these things in, if you go through it, you're going to have a business plan on how to move forward. So the outcome of the 90-day program, which is with Aspire Mastermind Group, the system is within there. That's what I call it. I take the Aspire Mastermind and I put it into my execution lab because that's what I built. 3 outcomes. If you don't have the money and you can't be pre-approved, at the end of the 90 days, you will have a business plan on how to move forward. So when you get the pre-approval and when you get the down payment, you'll be able to execute. That's outcome number 1. Outcome number 2 is if you are pre-approved and you have the money, you will have an accepted offer. You will be within a deal. Because of how we're going through this, you'll learn how to analyze, you'll know what to do, and then when you come across their property, you'll be able to pull the trigger. And then the third outcome is that you already closed. You're already closed, and now you're already working on what you need to do after closing, right? Because that's part of the 90-day program. It teaches you what you should be doing after it. If that's a fix and flip, BRRRR, or whatever it is, those are really only 2 other outcomes. Because if you buy and hold, you still will know, right? If you buy and hold, you will know what you need to do after that to fill your building up or make sure that you're taking care of it so you can start cash flowing. So those are the three outcomes you look for. Business plan, because you are unable to actually buy it because you don't have a pre-approval and you don't have the down payment. Second outcome, you will have an accepted offer. You will get under because if you are able to be pre-approved and you have the down payment, we'll get you an accepted offer. Three, you already closed, and now we're moving on to the next phase of fixing, flipping it, burning it, or stabilizing it. Again, foundation, as I was telling you, um, it goes through it everything, right? We help you learn your buy box. This is why I'd say that you should be, these three different phases will allow you to get everything underway and help you understand everything. The foundation is that the most important part, right? We're going to reverse engineer. We're going to find out if you can get pre-approved. We can find out if we can find you the down payment, right? And then we're going to teach you how to run the Aspire deal analysis framework. Now we're actually second phase. We're actually going on property tours, right? And these are real property tours because they meet your criteria. And so we're going to go to it. And that's the other thing of the difference between me and other programs. I'm a broker. I can actually take you on showings. I can actually take you through things, right? And I work with other agents that we can help you get through it. Even if you don't want to work with me, hey, we can make sure that we get you into the properties. One of the things that I do, especially for my out-of-state investors, is that I go on the showings for them and I videotape them and I upload them into a file folder so they can go see it. Maybe that's something I have to do for you as well, is that I just analyze, I'll go and look at the properties, I point out everything, I upload the video, and then you are able to make a decision from that standpoint. Because at the end of the day, the negotiating part of that is that you need the inspection and you need an inspector, because I can tell you certain things, but an inspector is what will have the stamp or approval of, yep, that's an issue, and now we can negotiate the price. And then the closing strategy, right? Like I said, even though if you get a accepted offer and you close in day 45, as we're going through the next phase, we will be helping you with that closing strategy, right? Now you'll know what you need to be doing from the fix and flip or the BRRRR strategy. And pretty much the BRRRR strategy and fix and flip are almost the same thing. It's just you're going to refinance at the end of that, or you're going to sell it. You don't do this alone. I tell people all the time, real estate is not a solo act. It's a team sport. You can't do this by yourself, and you shouldn't do this by yourself, right? And this is just what helps you really put things into play. And this is what after the deal council, this is something that I help provide for individuals that get out of the 90-day program, to help you still with things moving forward after we get you in a deal and you're looking for the next one. This is a service that I kind of offer after that to help you still analyzing, still using our program. So there's different three phases of it. But yeah, this is kind of the program that helps you keep the momentum going. So, you got two options, guys, right? This is at the point where you have to make a decision, right? You can keep trying to figure it out alone, or you can implement a proven system. As I share with you, I have a client. It works. We have a thing at Next Home. Works, right? If you work it, it will work. And this works. I've been doing this with multiple clients of mine. I simplified it, and with my background and my education and the knowledge that I've gained over the years, I know this works. And I'm not recreating the wheel. I put it in a way where it's more digestible. It helps you understand it. It just takes you step by step, and then I help you put the team. I've been doing this for a very long time, and I've already have the team in place, vendors, lenders, contractors, systems that you can use. It's already in place. You just got to plug and play, and then put in the work. Right. I'm not sitting here saying that I hate the term passive income, but I know it has a place. But this is not about being passive. This is about being aggressive. If you want to live the life that you dream of, you got to be aggressive. You can't be sitting back thinking that it's going to come to you. And I'm someone that attacks the things that I believe in and what I'm going after. And this is one of the services that I provide. Stop learning and start executing, right? This is, if you apply for this, one of my guarantees is that I'll get you to $1 million portfolio. Um, it's going to take 2 to 3 years. It depends on how aggressive you are. I say 3 years at the latest, but 2 years definitely. Um, it's a simple math problem, but it's a simple effort problem as well. Like if you put those two things together and stop learning and just start executing, because you know enough, you're smart enough. If you're listening to this, you know you have been taking the right steps to put yourself in a situation where you can accomplish the things that you want to accomplish. So obviously, if you want to apply for the lab, you can reach out to me. You can definitely go to my website, Charles A. Clark.nexthomemyway.com, and you can find it there. I will also put things in the message area where you can apply there as well. But yeah, this program works because the system works and the theory works and the environment works. It's the ecosystem. You're not just getting a 90-day program, you're getting an ecosystem that allows you to help you build your real estate business. Because again, I don't help you buy a property, I help you build a real estate investment business. The property is a business, right? I don't help you buy a property, I help you buy a business. It just so happens to be a property, right? And then you want to get multiple properties. So thank you for joining me for this live webinar. I hold these every Wednesday at 7. Now, next week, we will be having our Aspire Mastermind group. So I might be a little late or I might have to postpone it because it goes from 5:30 to 7:30. But I believe I'm going to sneak away and put on my live webinar, and maybe I will actually have a guest on to speak on the program and all the beautiful things that is going on with Raise the Standard and Aspire Mastermind Group. We're moving ahead with that as well. So if you're interested in that and you want to reach out to me, please do. The first meeting is always free. And after that, there is a $29 fee for the first level. And then we got different levels of that. And then if you want the 90-day program, again, that's part of school, but this is a larger program, if you want to speak on the system, right? I'm selling the system. Now I can teach the program, but this is a larger system that you're incorporating with the execution lab. Again, thank you to Next Home My Way for allowing me to use our social media lab, allowing me to put this on. So big shout outs to Next Home My Way. Charles Clark, we Raise the Standard Real Estate. My motto is if the deal doesn't work for me, my family, my client, and my community, I don't want to be a part of it. That's not a deal I want to be a part of. My next motto is be better by being better. Like every day you should try to improve yourself. You shouldn't try to get better. And that's part of the model behind the program that I'm doing. We're going to always move forward. We're always going to get better. We're always going to do the next best thing. And then my last one, what's your legacy? Why are you doing this, right? What things should be better, right? I want Milwaukee, Southeastern Wisconsin to be better because I was a real estate broker in this area. And that's the mindset you should have. Like, why are you doing this? Is you going to do this to help your family be better? They have a better legacy because you are in that bloodline. And that's the mentality you got to have if you're going to go after all this, right? So thank you again for joining me. Charles Clark, your real estate investment broker. Beleza.